Hello, everybody. We are delighted that you can join us for this session. We're going to be talking today about AI and automation within our space of trade finance. My name is Seb Kafetz. I'm head of Global Transaction Banking North America for Lloyds Bank. Lloyds, as many of you will know, is one of the largest UK retail and commercial banks, and we operate in North America, serving our clients with their global trade needs, in particular supporting clients with their trade flows throughout the UK and the US. I'm really delighted to be moderating this discussion, and I've got a great two panelists who are going to be working with me as we explore some of these really interesting topics. My first panelist is Inwha. Inwha works at IBM, and we also have with us Michael Spiegel, and Michael is at Standard Chartered. So with that, I will ask each of them to briefly introduce themselves, and then we're going to kick off. So let me pass firstly over to you, Inwha.
Thank you, Seb. Delighted to be here. Inwha. I'm a partner and practice leader at IBM for banking financial markets.
Thanks, Inwha. And Michael?
Hi, this is Michael Spiegel. Thank you very much for having me. I run trade finance globally for Standard Chartered Bank. I've essentially moved early in the year to Standard Chartered, and I'm based in Singapore. And we operate in 44 markets with onshore presence, of course, many other markets. And we're delighted to be with you today.
Thanks, Michael, and it's great that we've got colleagues, me representing a UK bank, Inwha, from the States, and you're now out in Singapore, Michael. So let's kick off with a broad question. We're going to talk about AI in our space of automation, but we all know that traditionally trade finance has been one of the slowest parts of our broader financial industries and financial sectors to innovate, and yet the pace of change that we are seeing over the last couple of years and looking forward is at a pace that we haven't seen previously. So I want to ask, why are we suddenly now seeing this in our space? And are we at the inflection point, or is that still to come? And let me start with you, Inwha, please.
Sure. I think it's certainly been an interesting year, but I think this is several years coming for trade finance at large. I think the market certainly has been one of the slowest within the financial markets, as you mentioned. But I think given the COVID, it's forced a couple of things. Clearly, remote working has really forced everyone to think about how do we process and how do we transact differently in a business like trade finance. And secondly, how do we do that more efficiently given the customer experience angle part of it? I think the B2B customer experience is becoming converging in similar to B2C. I think during COVID, it has been very clear that that's the case. I think it's everything the trade finance participants knew, but it's forced the issue. So I think the timing is now in terms of not just innovate, but how do you operationalize? We're talking about AI and automation here. How do you operationalize using AI and automation technology tools so that you create efficiency, particularly in the operations side of trade finance, as well as enable the remote working that we need to be doing globally, right? So this is a global phenomena, and I think trade finance, given that it is a global business, has forced that issue. But I will add, though, given within the trade finance market, it's not just the documentary trade finance, right? So if you think about supply chain finance, there has been enormous tech investments on that front, very different from the traditional trade finance. So I'm sure we'll touch on that as well, but I just want to differentiate the two aspects within the same market.
Thank you. Michael, are we at an inflection point now, or are we not there yet?
Yeah, first of all, I would like to expand a little bit on what Inwha said. I think it's a bit of a tale of two cities, right? I mean, one is the sort of the open account supply chain financing that has been, traditionally a lot more technologically advanced and was driven forward. We've seen, much earlier, let's say, fintech and third-party providers in that space. I mean, some of the payables financing companies have been around for decades in the meantime, right? So this is something that is actually not necessarily new, and you see either straight through processing or zero touch processing, and you've seen this for many years. So that's the one end of the spectrum, and there the tipping point, I would say, has already been a couple of years ago. And I mean, you do essentially see that from the anchor buyer till the payment is executed, depending on the institution, that takes a couple of minutes. Now, the other tail or the other city is clearly documentary trade, right? And absolutely, I agree with Inwha also that, and maybe your question is the right one, the tipping point is probably nearing or is already there. And the current situation, the pandemic, has certainly supported it quite a bit, because we saw many people not, having been able to access their goods, either because documents were in process or actually couriers didn't go, right? I mean, we had situations where you had couriers couldn't go from one state into another state in India, right? You had couriers couldn't go into entire countries, entire shipments were stuck. And so I think the alertness and the requirement has gone up massively and has expedited and accelerated the preparedness of everybody to actually move forward. And I think we have seen a lot of us in the industry coming together, supporting our clients and each other in facilitating trade. Now it is about time that we find broader solutions to this, but it's still some way to go, because it's not that simple to, entirely replace documentation and entirely move digital in that space.
And who is driving this? Is it client-led, or is it being driven by fintechs that see a way to disrupt traditional providers here?
I don't know if I may start. I think as a part of it, quite often you find fintechs to start finding a niche and then drive to disrupt. I've heard for many years, it's like fintechs versus banks. I've said this for many years, that it's, in my mind, it's actually fintechs. Fintechs are a very, very crucial part of a broader ecosystem, right? We've been talking about this for years, and in my mind, it is actually very good that we have, a lot of innovative minds in the industry who keep challenging traditional thinking and keep looking for solutions. So is it driven? I would say it was probably driven a little more by innovative minds, but it was equally driven by very large companies that have, requirements to automate their processes, or shipping companies, right? I mean, if you think about some of the largest shipping companies, right, they've had quite a hand in the innovation piece as well. So I think now it is converging, and we see much more aligned interests. Plus, in some instances, we see governments or government bodies driving this. I mean, if you think about Singapore, where I'm based, clearly Asia in general, you see a lot of development and actually, drive from a government perspective to automate that, because they rely quite to some extent on the international trade.
Yeah, I would just add, I think, again, it is two different markets. So when you think about traditional trade, I do think that's driven by customers. The amount, the lack of strong customer experience, high complaints in that space is enormous, right? And if you look at the corporate customer base, they have innovated faster than banks. And to that extent, when they have to deal with banks on the documentary trade side, it's backwards for them. So I think in that space, it is largely driven by customers. If you think about the supply chain finance space, like we talked about before, tale of two cities, as Michael put it, I think that is driven by competition. There is somewhat the customer angle, but the supply chain finance structure has become commoditized almost, that it is a tech play. And the fintechs in that space are way ahead of the banks. And I think that is forcing banks to go faster in that space. So I kind of look at that differently from what is pushing the banks to go faster.
Thanks, Inwha. Well, with that in mind, let's really get into some of the detail now. And, let's talk about AI in particular and some of the use cases that, we are seeing in our space. And I think we all know that one of the first use cases for AI has been around traditional trade and documentation, and the way that we check documentation, we review documentation. against shipping documents and other types of documents. So are we at the point now, where technology is providing a solution that's fully automated, or are there still holes in some of the methods and ways that we are using AI in that space? And if so, can they be plugged?
I can start with that.
Thanks.
So yeah, I think you're referring to, when you say documentary checking, traditionally, or until now, most banks are using the OCR technology, right? Which is really data extraction from documents. It's very basic. And most banks at least started with that. So I think that's, been pretty prevalent in again, documentary trade. What's happening now is there's been massive technology advancement in automation that the banks in this space have not leveraged as much. And it is looking at the end-to-end workflow versus pieces of the workflow, if that makes sense. So given that the documentary extraction and classification has started, the next phase is obviously checking that against AML, sanctions rules, using AI analytics, and then expanding that into issuance, right? So it's the whole life cycle. And within that, of course, credit approval if it's relevant. So the technology market has advanced quite a bit where all the tools are there. So when you think about automation, it's not just RPAs and bots anymore. It's also around decision rules engines, so that the decision rules based on business rules and risk appetite are automated, for example, right? There's also case management and how do the employees deal with exception rules? Those have been automated. So there's the technologies there. I think if banks look at the end-to-end workflow to create intelligence in that, it's absolutely doable. So that's on the documentary, I think advancement per your question. And of course, on the other side, there's a lot of analytics and AI use case that you can expand into, which we'll talk in a little bit.
Michael, what are you seeing, at Standard Chartered and some of the other firms that you've worked at in, the pace of utilizing AI, within traditional trade?
Yeah, look, while we say we've done it earlier on the doc checking side, I think we've actually been lagging a little bit. What I see in many instances, we did that to Inwha's point on sanctions, screening, checking, right? That namely screening, etc. I think that is technology where, interestingly enough, we had seen this on the clearing side much earlier, right? We talk about it a decade or two decades ago that we would have used parts of AI and machine learning there to detect pattern and to actually screen this. And on the doc side, I think we're not quite there yet as an industry, and that is clearly something we need to accelerate from my perspective, because it truly is how do we digitize documents into, bring them into the systems. But that clearly is on the fore. There are providers outside, right, that are working with some of us. Some of us refer them to, we've been teaming up with TradeStream, for instance, where we also take our clients to them to do like pre-checking, right, and see discrepancies, etc. We check this against our own doc checking, and then we kind of see what is faster, what finds more, and who finds more, and quicker to then backward integrate into the entire process. Actually, to Inwha's point, I think the front to back piece is not yet fully covered. There's a lot more to be done, and a lot more to be covered. I think the decisioning, for instance, right, clearly on the credit processes, there are a couple of pieces that we've been working with outside providers to go in particular into sort of the SME segment. What we can do there is to avail more financing, which sort of bridges from the traditional trade finance over open account into sort of the general working capital cycle. But there's a lot more to come from my perspective, and we've been a bit behind, I would say, as an industry, but it's also, you know, it's like somebody said, it's a bit difficult to put a chop on a digital on a data, and you know, sort of the you know, if you travel internationally, technically, you know, it should be so simple, right, to standardize, right? I mean, I remember years ago I was in the standards forum on Swift together with a very large American group, and we were debating about standardization, right? And both accusing each other of wanting to standardize, but everybody wants to standardize in his or her own standards. So we need ISO, right? And we need the ICC, and we see actually the ICC taking much more of a deliberate move. And I think we have now finally, as an industry, come to, you know, a point where we actually all want to push into the same direction, actually pull in the same direction, maybe better to say that, right? If you think about, and I used to be based in Europe, how long it took us for some of the payment formats to agree amongst the banking industry. I mean, you know, it's taken far too long. So I think there's no benefit of us having all those different formats. But that's only part of it. The other part is the standardization across the countries, right? The acceptance of electronic bills of lading, of certificates of origin, right? I mean, we know that Singapore and ASEAN has a couple of countries, they have agreements, but this is by no means a global agreement yet. And so there are great developments, and I would say the ICC, the Digital Standards Initiative, is certainly very, very helpful and will facilitate further developments there, because we will need to, you know, to find a way to actually create sort of a global standard for those data fields that is globally acceptable. Otherwise, we cannot support the global trade, and that is what is really required, because no matter what, globalization is there, and the division of labor is there, and even though there are strong, you know, strong forces sometimes against it, in my mind, the globalization is irreversible, and we just need to find a way to better facilitate that.
I think
and Michael, sorry, go on, Inwha.
Sorry, just to add to what Michael's saying, I mean, the standardization, it is a must-have, but it's taking years and it's difficult, right? But I think in the meantime, there are additional things that the industry can do within documentary trade. So, and a lot of banks have started this, but a lot of banks have not. So if you think about documentary trade, I mean, at its essence, right, inherently high financial crime risk. So around the financial crime risk analytics, I think there's been a lot of development in the industry. We have done that. A lot of tech companies have been looking at doing that. And that's a key part of documentary trade from a regulator standpoint, particularly. So I do think I want to add there has been advancements there in the AML and sanctions analytics, not just the checking, but the AI analytics piece of it, right? Bringing actionable insights, lowering false positives, lowering escalations to second line, third line, you know, that kind of thing. I think there has been development there. So while the docs are being standardized, I think that is a key piece that regulators look at. And you know, that should be broadened throughout the industry.
And a related question to you both is that, you know, traditionally banks would have tried to build a lot of this capability in-house. Is that now gone away? Are we seeing partnerships with, you know, firms such as yourself, Inwha and IBM and similar, you know, peers? Are partnerships the way forward in this space as a way, you know, coming back to your point, Michael, you know, to get some common standards? Do we need, you know, to, as banks, to work with big tech that, you know, can take that pan, you know, regulator, geographic types, you know, view of the world?
I don't look. I mean, from my perspective, so clearly IBM. We work with IBM on a couple of fronts, right? Everyone knows that. We work with others. We work with lots of different. So large tech, so big tech as you call it, fintechs. I mean, the collaboration will continue, and I think the days are over, at least in most places. I'm not sure it's always true everywhere, where you kind of try and develop everything by yourself. I mean, you see a lot more open source, right? We're trying to participate, trying to open up, right? I mean, through APIs, we see a lot more collaboration. But it's not that, I don't think there is in a way there's not on one hand, there's a requirement for us to collaborate, and there's a requirement to create interoperability between systems and platforms. At the same time, you don't want to stifle innovation, right, by pushing everybody into sort of the same mold, right? I mean, I think you actually welcome innovation, you welcome new developments, and you welcome new, ideas that may look crazy at the outset, but without those, we will not make enough advancement from my perspective.
Yeah, I think it is the build versus buy versus partner that's going on in the banking industry. And we work across the global banking industry, from large global banks to small banks. And what we're seeing is they're doing all of the above, right? So banks are not created to be a tech company. However, you do need that internal innovation and internal tech development of folks who really know the internal systems. So I think that's never going to go away. We certainly see the US banks investing hugely with data scientists and the likes internally. But at the same time, they're also partnering heavily with big techs and small techs. So, just seeing kind of what's going on, the landscape across banks, I think the answer is all of the above. But more and more, right, the budget within banks are going through technology than ever before. So I think that's an indicator of where is the funding going, and that, to me, is partnerships, and that's not building internally, but partnering with external tech, with the movement to cloud, right? The banks can't build cloud on their own. That's going to be a fundamental shift in the industry that's just started. And that has to be through partnerships, right, with the cloud providers, kind of laying out the new baseline. I think historically, a lot of the internal trade finance systems were built internally. And that's caused the issues with the legacy system issues, and a lot of challenges that banks are dealing with now is largely because of that. So I think a lot of banks have pivoted, is what we're seeing globally, from not building those systems, but really building agile layers, cloud-based tools, if you will, external partners, but also developing new product solutions internally on the back of that, right? So I think it's both. I don't think you can choose anymore.
Agreed, thank you. You mentioned data, and clearly everyone in all types of finance are thinking about how we can utilize our data to make better decisions for clients. Can we just talk about data and AI and some of the use cases, how we could use AI on the data side, and then also are there other use cases for using forms of AI within the broader trade space, whether that's traditional or open account or other facets of our business. And let me start with you, Inwha, and then we'll come back on to Michael.
Sure. So use cases. So the big use cases we're seeing outside of what we've talked about so far using AI is really around how do you look at customer segmentation? How do you look at sub-industry segmentation? And how do you predict behavior? So it's largely around customer segmentation as well as predictive analytics, I would say. And it's not the usual predictive analytics where you're using internal financial data, performance data. It's, look back, right? That's the typical kind of analytics that the banks have been doing. But it's looking at non-financial data and looking at behavioral data, looking at social media, looking at, news, et cetera, and compiling that into actionable insights. And that's providing predictive analytics, whether it's a financial health score, whether it's an overall customer health score, those sort of things. So we're seeing a big usage already in predictive analytics around customer segmentation and customer behavior. So I think that's one big bucket that we're seeing happening. And then what do you do with it? So the actionable insights off of that. So those are being created for example, relationship managers, for sales folks in trade, or even in back office in collections, right, in trade, or contact centers and client services in the back office. So there's the actual analytics piece of it, and then there's the usage that we're seeing in very different use cases. And given the COVID, given high loan loss reserves, collections have become a big area of focus all of a sudden that banks are expecting high defaults, right? So how do you use the same predictive analytics you did for sales into the back office? So we're seeing that movement quite a bit among the larger banks. And so that's an example. I think the other use case example that we're seeing a lot, and this is more with corporates, but some banks are starting to adopt what the corporates have done. And that's the supply chain piece that corporates are looking at. And particularly given COVID, given disruptions in supply chain, it's all about transparency and tracking within their supply chain, right? So within their specific sector, they have partnered with ourselves and others to look at supply chain monitoring, supply chain disruption, transparency, tracking. And there's a lot, that's all AI, right? That's all AI-based, machine learning based. And so a lot of corporates have been focused this year. So this is relatively new, but it has been growing. They've been focused on technology around supply chain visibility. And I think the banks are catching up on that, applying the same sort of methodologies, because at the end of the day, it's the same supply chain they're financing, right? So how do they get visibility into their client supply chain? I think that's just starting. It's very new, but adopting what the corporates are using. So those two are kind of the big areas that we're seeing.
Thanks, Inwha. Michael, from your side, Inwha gave us a sort of a great insight in lots of different use cases. Are you seeing anything specific that you guys are working on or your clients are asking for?
No, look, I think the predictive analytics clearly is something that everybody's looking at. I mean, trade data, actually behaviors, right? And a lot is into sort of performance risk. So we are working on looking into, how do you actually predict performance risk? And the supply chain, a lot has to do with the performance risk much rather than the financial risk, because at the end of the day, the anchor is the financial risk, and it is the performance risk of the supplier that is required to be assessed. And we've been working with an outside provider. We've been working with academics on that. So there's more to be done. Another use case that I see is they are companies and fintechs trying to match sort of the patterns of trade finance and try to avail financing to non-bank financial investors, because that's an area that has not been very open. It's an asset class that is not that well understood. I mean, all of us have actually, and Inwha knows that very well from earlier times. I mean, we're all distributing into either the bank, but also the non-bank sector. From an asset perspective, we can certainly all originate over time much more assets than we can finance ourselves. So there's a big piece of that too, where people are trying to use AI to actually match, sort of risk profiles with receivables pools that are available, and have much more sort of a matching technology underlying that. Now that actually is today compared to 5 years ago, right, is a lot more viable because there's a lot more data available, right? If you think about how we've opened up some of the financial data for companies, right, and you have a lot more data available, you can actually use this and you can match it, and you can do some risk scoring, and then you can match it against the appetite of the investor. And then start matching those and have auto settlements of that one. So there is more happening in that space, but that's still, even that is at a relatively nascent stage.
Thank you, Michael. Well, listen, I think that brings us towards the end of our discussion. Really useful. Is there anything either of you would, like to add as a final word here?
Ladies first.
Yes, I mean, I think, look, the theme here is trade finance it's the timing now in terms of not just banks, but the entire market, the entire ecosystem, corporates, banks, non-bank investors, insurance players, right? The whole ecosystem of players are looking at how to create more efficient business model at the end of the day. And I think AI and automation is at the heart of it. And given the technology advancements in that space and its immediate short-term value, right? Immediate short-term ROI, ROE, that particularly banks are looking at in this business, because trade finance at the heart of it, it's a commoditized business, right? And it's a high cost to serve. So I think the timing is now. I think culturally as well, there needs to be a cultural shift, not technology, it doesn't solve everything. Culturally, in terms of ways of working, right? Trade finance businesses within banks is also very behind in terms of new ways of working. So it's the technology and culture hand in hand, in my mind, that creates the future of work. So I think that's where we as a market hopefully are headed. And all of the ecosystem players are here to support each other on that. So I think that's very clear. I think it's a matter of, how fast can the banks go? The corporate customers are going very fast, and we're seeing that. So I think it is how fast can banks keep up with the corporate customers and meet their demand at the end of the day. This is all about customer experience. I come back to that. So that's my last thoughts here.
Thank you, Inwha. Michael? Yeah, look, I mean, trade finance is an exciting business. Has always been exciting. Is amongst the oldest, if not the oldest, banking business. Letters of credit have been the longest dying product of any industry. Probably will continue to diminish. At the same time, they're quite critical. And if it comes to at times of distress, financial distress, we will see continued use of that or a derivative of that. Right? To Inwha's point, it depends on how quickly we can innovate, we can we can increase the client experience. I think the ecosystem keeps evolving between big tech, fintech, banks, corporates, platforms, government providers. There's an element of security that also needs to be considered. Right, we've not touched much of this. One is AML. There's clearly lots of fraud. Some have been subjected to that in the more recent past again. So there's a lot of applications, right? Banks play a vital role in terms of providing financing, and as an intermediary, we clearly have evolved and we continue evolving, and we keep looking for the future ways of working. Right, to Inwha's point, clearly that is something that is critical. I mean, we're all figuring out, how will it look in what kind of locations do we sit when you think about how we were able to satisfy with the 80-90% of staff working remotely, including trade operations for many months in many markets, how that actually has changed sort of the aptitude and the willingness of the industry actually to move forward. I mean, this has clearly been an enzyme that nobody clearly had foreseen and not even believed that it's possible. So I think there's massively more to come, right? And the ones who will think of it as forward-looking, as client experience, and also provide the financial. Right? I mean, we still need to finance global commerce, right? And there is financial inclusion, financial exclusion. There are many facets that we need to consider and drive forward. It's exciting times. Innovation clearly is at the fore, and it's great to be in that industry. I think we all agree, Michael. Thank you. I mean, ultimately, whether you're a fintech, a bank, an investor, you're here to serve your underlying corporate and your underlying FI to help them facilitate trade on behalf of their clients. And anything we could do by using AI or automating processes to make that a better, more seamless and quicker experience for our clients and their clients, the more that we're going to grow this business collectively. So thank you both very much. I hope everyone who's dialed in, thank you very much for listening to us. We really appreciate it. We hope it was informative, and we hope you guys have a great rest of the day. Thank you very much.